In this video, I will test this super smart indicator strategy that gives you 99% win rate created by quantum trading strategy to see if this is really that accurate. I will backtest it 100 times with an initial account size set at $1,000 with a 1 to 1.5 risk to reward ratio. I will also be improving this strategy in the second part of the video, so make sure you stay focused and learn this amazing technique that you will not find anywhere else. Like, subscribe, and turn on those notifications so you don't miss out. Now, without further ado, let's get into it. Okay, so for my backtesting, I will be using Ethereum versus USDT on the 5-minute time frame. This strategy consists of two free TradingView indicators. Now let's go ahead and add them to our chart. So navigate up to your indicators tab, and the first indicator we will be searching for is UT bot alerts, which is this one here. Obviously we need to change its settings, so come over to it and double click on it. So let's move over to our input section, and we'll be changing our key value to 2 and our ATR period to 6. Okay, so we can see that this is a really simple to read buy and sell indicator. It does issue pretty good signals sometimes. We see that we actually managed to get a good few trades there that were successful. But if you take a look at the ranging market, it doesn't really work that well on its own. So this is just going to be our first confirmation indicator. And for the second indicator, we'll need to add our STC, a better MACD by Cheyenne KM. We will need to change the settings on this indicator as well. So first, let's change the length from 12 to 80. And then we're going to be changing our fast length from 26 to 27. In the style section, we're also going to be coloring these plots. Alright, so the strategy is complete. Let's now get into the trading rules. So here are the rules for entering a long trade. First, a new buy signal has to be issued by the UT bot alert indicator. The STC line has to be positioned below this blue plot. The line also has to be colored in green, and it needs to be pointing upwards. And only when we have these conditions met can we safely enter a long position. So we'll be opening our long position on the close of our trigger candlestick. Our stop loss will be set at our most recent swing low. I know the creator of this strategy was using a different money management approach. He basically had multiple take profit targets, but for simplicity purposes, let's just set our take profit at 1.5 times the risk. The rules for entering a short position are exactly opposite. First of all, a new sell label has to be printed above the price. The STC line has to be positioned above our orange plot. Our line needs to be red in color, and it needs to be pointing downwards. And if all of these conditions are met, we can safely enter a short position. So we'll be entering it on the close of our trigger candlestick, bringing our stop loss there up towards our most recent swing high, and once again targeting 1.5 times the risk. Okay, let me give you some more examples so you have a better understanding. So let's first start with a sell signal right here. We see the STC indicator is positioned above our orange line. The STC is colored in red, and we're also pointing downwards. So we'd be entering our short on the close of this trigger candlestick, bringing our stop loss there just up above our most recent swing high, and once again targeting 1.5 times the risk. Here we have another example of a buy position. We see the STC printed our buy label below our price action. Our STC is below our blue plot, and we are also colored in green and pointing upwards. So this is a valid long entry, so we'd be entering that on the close of our trigger candlestick, bringing our stop loss down towards our most recent swing low, and once again targeting 1.5 times the risk. I think for this strategy, we can even use different money management rules. You would simply close a winning sell position once you have a buy position printed. In this case, we would have returned 1.72% and a 2.5 risk to reward ratio instead of our original 1.5 risk to reward. Another example of a sell position. So in this case, we would have returned a good profit using our original money management system. And if we had went for the sell when we were in a winning position once we printed a new buy signal, we would have returned a lot less, but it still would have been profitable. Okay, so this is where we start having some problems with this strategy. So we see that this sell signal was actually confirmed. And we can clearly see that this was a losing trade. This sell signal was also confirmed. And we see we had another losing trade. So that's a good few wins, only against a couple of losses, which is definitely pretty good. So let's actually do our backtesting and see how well this strategy would perform in different market conditions. Okay, so the backtesting is finished, and here are the results. This strategy is definitely not 99%, it's only 55%. Our account size has increased by 104% after 100 setups, which tells us that this strategy is definitely making some good money. The profit factor is 1.83, and we had 6 consecutive wins against 3 consecutive losses. So overall, I think this strategy is pretty good, and now let me give you some tips on how to actually improve it. First of all, let me try to eliminate trades that look like this, where the overall structure of the market is bearish, but the strategy is giving us valid long entries. This is definitely not good, and in order to filter them out, I think we need to add a nice baseline to the chart. So come up to our indicators tab and type in Hull Suite, which is this one by In Silico. You can either leave this on default settings or you can make it a little slower. Right away we can see that we eliminated one of these bad signals. So for a buy position to be valid using this strategy, we need to have all the previous conditions met, where our UT bot alerts indicator printed a buy signal, our STC is positioned below our blue plot, we are colored in green and pointing in an upwards direction. So we can safely enter our long position on the close of our trigger candlestick, bring our stop loss down towards our most recent swing low, and once again target 1.5 times the risk. Adding a good baseline to a chart is always a good idea because it gives you more safety. I would personally probably change the length of the Hull Suite, maybe from a 55 here to 144, and take a look and see if it eliminates more bad signals. If you don't want to add a baseline to the chart, that is okay. You can add a volume indicator instead. So for that, I'd probably be using the volatility oscillator. This is definitely a really good tool and it eliminates a lot of losing trades. The long signal would only be valid when the volatility white line is above this upper band. So we can see that this would have been a trade that we would have actually entered. But remember, this volatility oscillator doesn't just eliminate bad trades, sometimes it will eliminate winning trades as well. But I tried using this indicator with different trading strategies and it pretty much improved all of them. So yeah, having a volume or a volatility indicator on a chart will always make the strategy better. In conclusion, I would say that this trading strategy by Quantum Trading Strategies is pretty good. However, if you want to get better results, I would highly suggest you backtest it with the indicators I just showed you. Okay traders, I hope you enjoyed. If you did, please leave a like, comment, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.